Right, Mr. Oswal joins us to take us through Motilal Oswal's performance this quarter around and what they are hoping to do from the future. Mr. Oswal, great to have you on the show. You know, brokerage volumes have kind of not shown that much of a pickup. What's the expectation really going forward on the retail brokerage side?
I think if you look at the pattern in last couple of quarters, I think the whole activity is dominated by the FIIs. So the retail as well as the domestic institutional investors, they are more actually net sellers and sitting on the sidelines. But I think this quarter we saw some traction in September month, and maybe October also is far better than the September. So I remain quite optimistic about the overall activities going up in the market, especially the retail side, where the people are now coming and buying secondary kind of transactions, as well as there is a huge interest you have seen in IPOs when you look at the numbers of recent IPO like Coal India and all. Yeah. So in that sense, the traction is coming back, although it's not at desired level.
Right, Mr. Oswal, you know, the stock as it's opened is down about 3%. Optically, the numbers have shown a bit of a dip on, you know, on the operating income. You're down about 5%. Profits are down 30%. Margins have shrunk. What would you say to your investors to convince them and perhaps reassure them that, you know, the coming quarters would be more promising than what you've experienced over the last 3 months?
I think while on the face of it, numbers may look kind of slightly bad if you look at the reported numbers, which is profit is down 30%. But if you exclude certain extraordinary or one-time kind of adjustments in the income, overall quarterly our profit is up by 10% quarter on quarter, and year on year we are down about say 7%. So I think we need to compare the right kind of numbers. So looking at the kind of environment we have seen in the market, especially on the retail side, I would be quite satisfied with these kind of numbers. And as I said, that I would remain quite confident and optimistic about the thing. Most of the retail business, if you look at historically, I think that the volumes are far better in the second half because of I think budgets and the FIIs allocations coming in the last quarter. So in that sense, I am satisfied with the numbers, although there is always a scope for huge improvements in the numbers. But the biggest kind of disappointment was on the cash market activity, which is substantially down when you compare year-on-year basis. Year-on-year basis, like I think Q2 of last year, we were seeing cash daily average turnover of about 24 to 25,000 crores. While this quarter we are seeing about 19,000 crores. So I think, and you know, the cash is a slightly higher yielding business. And that's you know the reasons, because the retail was not really so much active.
Great, Mr. Oswal, good morning, Neeraj here. In fact, that was going to be my question, that while the F&O turnover is very high, the cash market hasn't done too well. What about the quarters ahead? Would that activity show a bit of a pickup? That is one. And two, give me some ideas about how the broking yields are panning out, and how are other business segments shaping up? Investment banking, I know you've done a couple of very good deals as well. How are the other verticals shaping up for you?
Yeah, I think your first question is about the activity in the cash market. If you look at Neeraj, I think September month was I think much better than July and August. And even October, I think first few weeks we have seen about volume going, cash market volume going at about 16 to 17% compared to the previous month. So as I said, the traction is coming back on the cash market, and which shows that investors are far confident in investing for medium to long term, and so is the case through IPO and all that kind of stuff. Coming back to yield, since the overall cash market volume is about 16% and 84% of the volume is coming from future and options, especially the option side, which is about 53%. So yields definitely are falling because the business mix changing. It's not that cash yields are falling. Cash yields at our end, cash yields are I think slightly better than what used to be. But since the F&O contributes about 84% of the volume, so that's why you're seeing the yield table slightly coming in down. But my sense is that now cash market will pick up from here, and we could see some improvement in the yields. Your next question is about other businesses. If you look at the numbers, sorry?
Yeah, please carry on, sir.
Yeah, so I think the two businesses which have done very well compared to the broking business is the asset management business and the investment banking business, where quarter on quarter as well as year on year we have shown, I think, good growth.